The First Home Savings Account, or FHSA, is the latest tool provided by the federal government to help first-time homebuyers save up for a down payment. Now, while many of Canada's financial institutions are still in the process of rolling this product out to their clients, it's a great idea to become familiar with it now and to create a strategy for when it may be available from your FI of choice. Now, the key feature about the FHSA is that it is tax deductible, meaning any funds you deposit into it are deducted from your taxable income for the year and you'll receive a return. You can deposit up to $8,000 in your account per calendar year, and that room rolls over into the following year if you don't use all of your contribution room. There is a lifetime maximum of how much you can deposit into an FHSA of $40,000. However, you aren't capped on any income you might earn on investments that are housed within it, which are also tax sheltered. Partners who are saving for a first home down payment together can also each have an FHSA with a combined total contribution room of $80,000. Now, you may be wondering how the FHSA differs from other federal first-time homebuyer and tax-free programs. One, it truly is tax-free. Unlike an RRSP, which shelters your funds until you withdraw them at the age of 71, usually at a lower tax bracket during retirement, you won't be taxed on your FHSA funds when you withdraw them for a first-time home purchase. You can also convert those funds into an RRSP tax-free at any time. Two, you never need to pay the funds back. Unlike the home buyer's plan, which allows buyers to pull funds out of their RRSP for a first-time home purchase as long as they replace them within 15 years. And three, unlike a tax-free savings account, your deposited funds aren't taxed at the source. Now, while you can use your FHSA just like a savings account, you can also utilize it to put your money to work. There are a number of different investment vehicles that can be housed within it, including cash, bonds, securities, mutual funds, and GICs. In order to access your FHSA funds, you must have entered into an agreement to either purchase a home or you're converting those funds into an RRSP, again, with no tax penalty. As of May 2023, only 3 Canadian financial institutions are offering the FHSA: Royal Bank of Canada, National Bank of Canada, and Questrade. We'll report back as more lenders add this new account to their product lineup.